Okay, guys, we'll start now. Okay, see, the next perquisite is traveling, touring and accommodation. Traveling, touring and, meaning that employee is going on a vacation. No, it is not written, I am telling you. Employee is going on a personal tour. He can go with his family. Yes or no? So whenever the employee will go for a vacation, don't you think he and his family member will roam around nearby areas? For example, summers are there, employee and family members are going to Shimla, Kullu, Manali. Yes or no? Nice weather, cool weather. So where they are going to stay? Igloo. They are going to stay in some hotel, some guest house. Yes or no? They are going to do the sightseeing and all. Yes or no? So nearby areas they are going to travel, they are going to tour. Yes or no? So the expenditure on this entire facility can be incurred by employer. Employer can give this facility. So even this facility provided by the employer for traveling, touring, accommodation, what type of facility can be given? Do one thing, go in a hotel, stay there. The hotel is already there. Okay, you're supposed to go there and the bookings and everything is done. And the car, etc., everything is booked for you. Go and enjoy your stay. Or it might also happen that employer is having a guest house over there. Or he might have his own vehicles for traveling and all. So this type of facility can be given to the employee while the employee is going on a vacation. So even this is treated as a perquisite under clause 8. The value of this perquisite will be determined as per rule 3(7) and will be taxable in the hands of employee. So if this facility is uniformly provided to all the employees, meaning selected employees are not going to get this benefit. Whatever employees are going to go there, all the employees will get this benefit. Uniformly this facility is provided to all employees. Or this facility may not be uniformly provided to all the employees. Meaning only few selected employees are going to get this type of benefit. Yes or no? So if this facility is provided uniformly to all the employees, then this benefit will be taxable. This value will be taxable. And if this is not uniformly provided to all the employees, then the taxable value will be calculated like this. So for example, all of my employees, for all my employees, I am giving this facility. Then, if any of you get this benefit, what will be the taxable value? It will be amount actually spent or reimbursed by the employer on such facility. Amount actually spent will be your benefit. But this amount actually spent will be your benefit only if all the employees are uniformly getting this benefit. Yes or no? But if selected employees are getting this benefit, uniformly the benefit is not given to all the employees, only few selected employees are getting this benefit. Then value at which such facility is offered by other agencies to the public. In that case, the amount which you should have spent, if this facility was not provided by the employer to you, then you would have to spend the amount from your pocket. Then how much you would have spent? The public, general public, which spending, meaning if from the other agencies you would have gone and booked the hotel, you would have gone and booked the cabs, etc. Yes or no? How much amount you should have paid at that time to that agency? That amount should be your benefit. Getting my point? So if the employer is providing the benefit uniformly, then this is the value, amount actually spent by the employer. Or if the uniformly this benefit is not given to all the employees, then value at which such facility is offered by other agencies to the public. Meaning, if guest house is not provided, then you would have stayed in the hotel. If employer's car was not provided, you would have taken the car on rent. So other agencies means hotel. Other agencies means car rental company. They are other agencies. If the employer would not have given you this facility, you would have taken this benefit from hotel. How much amount you would have paid there? That is your benefit. Employer would not have given the car, then you would have taken a car on rent. How much that car rental company would have charged from you? That should be your benefit. Getting my point? Minus the amount recovered from the employee, if any. Both these value will be given in the question. If this perquisite is given in the question, the taxable value, usually they only calculate, and this taxable value is always given in the question. We just have to pick up that taxable value and show it taxable under the salary head. Will you be able to do this? But if that taxable value is not given, the taxable value is calculated like this. But don't worry, in all the cases, they calculate the taxable value and they only give the taxable value to you. They don't bother you to calculate this value. Getting my point? Everyone? Now see, if traveling, touring and accommodation facilities provided by the employer to the employee while the employee is on, this is a benefit which is taxable only if you are on a personal tour. But what if you are going for some personal, some official work? Your employer is sending you to Mumbai for some official work. Will he accommodate you? Will he take care of the traveling, etc.? Isn't it a benefit? But that is not a benefit of personal nature, because you are not going for any personal tour, personal visit. You are going on an official tour. So on an official tour, if the employer is providing such benefit, that benefit is not personal in nature, that benefit is official in nature, then that benefit will be fully exempt. Will you remember this? Hello? Now, if you are going to Mumbai, some of your family members can also join you. You are going for official tour, yes or no? But while you are on official tour, your family members can also accompany you. Is it possible? Hello? I'm just now married. Okay. And the company is sending me to Mumbai for some official work. And the work is going to take care, work is going to go for a week's time, 10 days time. So my wife said that if you are going for official tour, company's work, you are going to Mumbai, let me also come with you. After the office work and everything will be over, we'll go and we'll visit the different places in Mumbai. I said, okay, no problem. So while I am going for official tour, my wife is also accompanying me. Possible, not possible? So can my employer spend money on the traveling, touring, accommodation for myself and my wife also? Yes, he can. If he wished to spend the money, I will tell him, no, don't do it. I will say, absolutely yes, no problem. I am going on official tour. I will stay in hotel. My traveling, touring, accommodation, all the cost will be borne by whom? Employer. Along with me, my wife is also coming. My family member is also coming. The traveling, touring and accommodation cost of my family member might also be met by my employer. That amount will be a personal benefit for me. Even if I am going for a official tour, but on my official tour, if some family members are accompanying, on those family members, if the employer is spending money, that amount is a personal benefit for me, even if I am on a official tour. Getting my point? So I will have to do a proportionate calculation. That for two persons, the total cost borne by the employer is this much. How much should be for one person? For myself, the amount will be fully exempt because I am employee going for official tour. But on my official tour, if my wife is also coming, my family members are also coming, for them, whatever proportionate cost is borne by my employer will be a benefit, personal benefit for me, that will be fully taxable. Will you remember this? So, however, if such facility is provided by employer for any household member of the employee accompanying such employee while he is on, then that benefit will be fully taxable. Yes or no? Now, if the official tour is extended as what? Vacation. So now 5 days official tour was there. 5 days over. I should come back. Yes or no? But what I am telling my employer, that you have sent me to Delhi for office work. 5 days office work is over. I want to roam around and I want to visit different places in Delhi. Give me 3 days vacation, 4 days vacation. 4 extra days I want to stay. After completing my official tour, I am extending my tour by 4 more days. But those 4 days is not my official tour. Getting my point? For those 4 days, I want to, visit different places nearby Delhi area. So employer said, no problem. For those 4 days also, stay in the same hotel. Keep the same cab, etc. And don't worry, for those 4 days also, I will bear the cost. Possible, not possible? So if the official tour is extended as what? The value of such benefit shall be limited to the expenses incurred in relation to such extended period of stay, which would be taxable for the employer. The taxable value will not be calculated for the entire stay, because out of the entire stay, some time was official. Only the extended period. For that extended period, whatever benefit is coming, only that is going to be taxed in my hands. Understanding? So this was your traveling, touring and accommodation. Second perquisite. Second fringe benefit. Yes or no? Third fringe benefit. Food and non-alcoholic beverages. Means meals are provided. So can your employer provide you meals? Isn't it a personal benefit? So the value of that meals will be calculated and it will be taxable in your hands as a perquisite. How the value will be calculated? As per rule 3(7). Now this rule says that if such facility is provided by the employer on the following basis. What basis? See, if employer is providing free meals and non-alcoholic beverages during office hours, including overtime. Yes or no? In any remote area or offshore or onshore installation sites. Installation sites. Yes or no? Offshore installation sites, etc. Meaning that your employer is sending you to work. Where? In some remote area. So there he is providing you meals. Is he providing you some personal benefit? Or he is just fulfilling his responsibility? Because if he is sending you to work in such remote areas to work, it will become his responsibility to feed you over there. So he is just fulfilling his responsibility. He is not trying to give you any personal benefit by providing such meals over there. Yes or no? So that benefit will be fully exempt. Whatever may be the value of those meals will not be taxable. Understanding? Hello? What if the meals are provided in the office? In other cases, if not in the remote area, if remote area the meals etc. is provided, then the benefit is fully exempt. Understanding? But what if the meals are provided in the office? Business premises, yes or no? Through non-transferable food vouchers. So how the meals will be provided in the office? Come on, tell me. Canteen will be there. Go and eat in the canteen. Don't pay anything or pay a very nominal amount. You might have seen that in many companies, the canteens are there. So go and eat in the canteen. Whatever meals we are going to provide in the canteen, per meal, the employer has to spend 120 rupees. So one meal you will eat employer will have to spend 120 in the canteen. Or if canteen is not there, employer is having some caterer. That caterer might be providing in the office. Yes or no? Per meal, employer has to spend 120 rupees. So that 120 which the employer is spending for each meal, don't you think each meal 120 rupees benefit is given to you? Or the employer can give you 120 rupees food vouchers also. We don't have a canteen over here and we are not going to bring food from any caterer. Even if we bring, food will cost 120. Instead of that, employer will give you a coupon. Employer will give you a voucher of 120. Possible or not possible? So food can be provided in the office, in the canteen, or through caterers, or food can be provided through non-transferable vouchers. Now whatever cost the employer incurs per meal, what did I say? Whatever cost the employer incurs per meal, that is your benefit. But that is exempt up to 50 rupees per meal. That is exempt up to 50 rupees per meal. If the expenditure incurred by the employer per meal is 50 rupees or less, that will be fully exempt. But if it is more than 50, then 50 will be exempt and the balance will be taxable. Hello, sir. Alternatively, excess amount is taxable. Alternatively, full amount can also be taxed. Because the rule is silent. Rule says that if the cost per meal provided by the employer is 50 or less, then it will be fully exempt. What is to be done if it is more than 50? The rule is silent about that. So whenever the rule is silent about such things, we have two options. Number one, either the full benefit is taxable or excess amount over and above 50 can also be taxable. So if the value is more than, if the value per meal is more than, then amount in excess of 50 will be taxable or full amount can also be taxable. Both the views are correct. Follow any one and give a note that since the cost per meal provided by the employer is more than 50, entire value is taxed. Alternatively, excess amount can also be taxed. Give a small note about that. Yes or no? Or if you are charging the excess amount, you are supposed to write, we have charged the excess amount. Alternatively, full amount can also be taxed. Yes or no? But the note is compulsory. Note you will have to write. What if the value per meal is only 50? Fully exempt. Less than 50? More than 50? How much taxable? Either excess can also be taxed or full amount can also be taxed. But this taxability will be there only if food, meals provided in the office, in the canteen or through caterers, or it is provided through transferable food vouchers. Only then the taxability will be like this. Yes or no? And remember, this 50 rupees exemption is available only if you shift out of 115 BSE. Only if you shift out of 115 BSE, only then this exemption is available. If you don't shift out, if you follow the default tax regime, if you don't shift out, you follow the 115 BSE, then this 50 rupees exemption is not available. Understanding? Hello, sir. So, can I say exemption will be available? 50 rupees per meal will be exempt only if the assessee shifts out from 115 BSE. What if it does not shift out? This 50 rupees exemption is not available. Whatever will be the value per meal, that will be fully taxable. Please remember this, important thing. Next one. Now tell me, if the meals are provided in remote area, then will you see the value of meal? Will you see that the assessee is covered by 115 BSE, not covered by... No need to see. If the meals etc. are provided in remote areas, then whatever may be the value of that meal, 50, less than 50, more than 50, fully exempt. Whether the assessee is following 115 BSc, then also fully exempt. Not following 115 BSc, then also fully exempt. Will you remember this? Now see, refreshments can also be provided. What do you mean by refreshments? The purpose for which we took the break. Idli, sambar, dosa, hello. Tea, coffee, snacks. Can I say tea, coffee, snacks? That is nothing but refreshments. So if the employer is providing refreshments in the office premises to the employee, hello, then can the employer incur the cost? Can the employer incur the cost on this refreshment? Yes. Now whatever cost is incurred on the refreshments, out of that cost, how much benefit is happening to which employee? Is not easy to determine. It is impossible to determine. For example, full year total expenditure incurred is 20 lakh rupees on your tea, coffee, snacks, etc. Yes, 20 lakh is a very small amount, I am telling you. People do spend lakhs and crores rupees for that. Just imagine a company like Reliance, how many employees will be there? All the employees. If one tea, if you consider the cost of one tea is rupees 10, thousands of employees are there. And there is no limit on the number of teas which you can consume in a day. Consume as many tea and as many coffees as you want. Some employee might be drinking only 2 or 3 cups of coffee. Some employees might be drinking 10 cups of coffee. Yes or no? So for the full year, what did I say? For the full year, the total cost incurred by the employer on your refreshments was 20 lakhs. But out of that 20 lakh, how much benefit is happening to which employee? Can you identify that? Not easy. It is next to impossible. And you cannot do 20 lakh divided by number of employees. That is also not good. Why? Because if you proportionately allocate that amount, some employee might be charged more and some employees might be charged less. So proportionate can also not be done. Yes or no? And it is very difficult to identify that out of the total benefit, how much benefit is happening to which employee. Hence this benefit is fully exempt. Nothing will be taxable in the hands of employees. Because it is difficult to determine the taxable value out of that. Understood? So refreshments means tea, coffee, snacks, etc. provided during office hours, including overtime. Whatever cost incurred by the employer for this benefit, even if it is a personal benefit, will be fully exempt. The taxable value will be nil in the hands of employee. Why? Because the benefit value per employee is very difficult to determine. Understanding? This entire stuff you understood? In any other case, what did I say? Now, any other case is there, meaning the meals etc. not provided in the office, meals etc. not provided in remote areas, refreshments are not there. So this is not the case, this is not the case, this is not the case. In any other case, if the meals are provided, then actual cost per meal incurred by the employer will be fully taxable minus the amount recovered from the employee, if any. That's it. And here also, whatever benefit which is getting taxable, whatever benefit which is getting, out of that, if some amount is recovered from the employee, that amount will be reduced. So here, you are going to get 50 rupees per meal exemption, but you are not going to get any exemption here in any other case. So meals should be provided in the office. Meals should be provided in the canteen or through caterers, or it can be provided through non-transferable vouchers, which can be used in nearby eating joints. You might have heard about that Sodexo coupons. Sodexo coupons are there. So these coupons, usually the employer buys these coupons and distributes these coupons to the employees. That see, we are not going to feed you food over here, but this coupon I am giving you, this coupon in nearby any of the restaurant you will go, give the coupon and eat whatever you want. So that is known as what? Non-transferable food vouchers. So food can be provided in the office. Yes or no? Through non-transferable vouchers also. Only in that case 50 rupees per meal exemption is available. In any other case, if the meals are provided, yes or no, then the value of meal will be fully taxable. Whatever may be the value of that meal, yes or no. So if your case is covered here, then fully exempt. If your case is covered here, then fully exempt. If your case is covered here, then up to 50 rupees per meal, exempt. More than 50 then? How much? Excess can also be taxed and full amount can also be taxed. Yes or no? In any other case, full amount spent by the employer will be taxable. Yes or no? Whenever you are charging any amount, out of that, whatever amount recovered from the employee will be reduced. Because the benefit is given, but out of that benefit, some benefit is taken away, no? In the form of recovery. That benefit should not be taxable, which is recovered from the employee. Understanding? Will you remember? Clause number 8. 3 perquisites. Interest benefit? Done. Traveling, touring accommodation? Done. Right now we have seen food and non-alcoholic beverages, meaning meals. Yes or no? Now see, we are coming to the next perquisite. Perquisite number 4. Can the employer provide gifts? The employer will give gifts to whom? Or any of his household members. Not just employee. Not just, but the gift can be given to any other household member of his, any other member of his household. So can the employee get the gift? Yes. Can the household member of the employee get the gift from the employer? Now if that gift is given in cash, money is given, then full amount is taxable. Whatever may be the value of that gift will be fully taxable. Yes or no? But if that gift is given in, then you have to check the aggregate value of that gifts received in kind. So if the employer has given gifts in kind during the previous year to the employee or any of his household member, you have to take the aggregate value of all such gifts. You have to check don't check the individual values, check the aggregate value of all such gifts given in kind during the previous year to the employee or any of his household members. If the aggregate value is up to 5,000, if the aggregate value is up to, nothing will be taxable. Fully exempt. After that the rule is silent. What if the aggregate value of gift is more than 5,000? Rule is silent. Then you can do two things. Either the full amount, full aggregate value will be taxable, or excess can also be taxable. Whatever you do, whatever treatment you are giving, you are supposed to give a note for the alternate treatment also. Yes or no? Will you remember this? So if the gift is given in cash, if the gift is given in, the gift can be given to the employee or any of his household member or any of his, whatever gift is given in cash, fully taxable. 5,000 limit you are not going to apply there. Yes or no? But if the gift is given in kind. So during the previous year, whatever gifts which are given in kind, either to the employee or any of his household member, you have to take the aggregate of all such gifts. Yes or no? If the aggregate value of gifts in kind is up to 5,000, fully exempt. More than 5,000? Taxable. How much will be taxable? Excess can also be taxable and full amount can also be taxed. Both the views are correct. Both the views are. Please read this. Done, sir. So, first perquisite was interest benefit. Second was traveling, touring and accommodation. Third one, meals. Fourth one. Now coming to the fifth one, credit card. This entire thing, no, which I have written here, don't worry, the value will be given in the question only. They will tell you credit card facility given by the employer. This is the value. Pick up that value and show it taxable under the salary head. Will you be able to do it? But if that value is not given, which is not possible, usually they are going to give that value. Always this value will be given. So this value you are not supposed to calculate. This value they will only calculate and they are going to give you this value. But try to understand that if your employer is paying credit card bills, your credit card bills, who is paying? Or employer might reimburse also, yes or no? So don't you think the credit card, you are swiping the credit card for your expenses? Whatever credit card bill is there, that credit card bill is nothing but the expenses which you have swiped through that credit card. What type of expenses you will incur on your credit card? Tell me. Personal expenses. So meaning that credit card bill is for personal expenses and that is reimbursed by the employer, paid by the employer. Don't you think that it is a personal benefit for you? So the entire amount spent by the employer on your credit card, amount of credit card bills paid by your employer will be your benefit, including any annual charge on that credit card. Sometimes annual charges are also there, no, on credit card. Even those annual charges are also paid by the employer. So monthly bills are also paid and annual charge of the credit card is also paid by the employer. Whatever amount the employer is going to pay will be your benefit. Minus if the employer is doing some recovery. See, I will pay the credit card bills. Full year credit card bills I will pay. I will also pay the annual fees. So full year, whatever credit card bills will come, that is going to be paid by the employer. But out of that, 20% amount I will recover. So how much is spent? 1 lakh. How much is paid by employer? 1 lakh. Out of that, 20% employer is recovering. 20,000 recovered. So how much is your benefit? That only will be taxable for you. He has spent 1 lakh, but recovering 20 from you, so your benefit should not be 1 lakh, your benefit should be only 80,000. Done, sir? Now they are giving you one more thing, they are telling you one more thing, that see, it is not necessary that always the credit card will be swiped for personal expenses. Sometimes the credit card is also swiped for some official expenses. So don't you think that employer has paid the credit card bills, meaning in this credit card bills, if some official amount is also there, yes or no, that should not be treated as your personal expense. That should not be treated as your personal benefit. So do one thing, in your credit card, whatever official expenses you have incurred, whatever these official expenses are also reimbursed by the employer, yes or no? So out of 1 lakh which is reimbursed by the employer, 1 lakh which is paid by the employer, out of this 1 lakh, 10,000 rupees expense was official in nature. Don't you think that this 10,000 should not be taxable in your hands? Because it is not a reduce that amount. After reducing that, 90,000 is personal credit card bills paid by the, how much is the total credit card bills? 1 lakh. How much is total credit card bills paid by? Is it a benefit? But out of that, 10,000 is for official purpose. 10,000 is for, should that be taxable as your personal benefit? Reduce that 10,000. So how much is personal now? That should only be taxable. But out of that, 20,000 is recovered from the employee. Reduce that 20 also. How much remains? That should only be taxable. Understanding? But no need to do all such calculations. This will be calculated and will be directly given in the question. That credit card facility, the taxable value is 70,000. Calculated 70,000 given in the question. No need to do anything. Pick up that 70,000, show it taxable under salary statement. Will you be able to do it? Hello? Perfect, no? Now see, you want to reduce what? Official expenses, no, out of here. So you will say that this much amount is official, I am reducing. Will you be allowed to reduce that amount just because you are saying it? You will have to prove that out of the total credit card expenses, you are saying that 10,000 was official and you want to reduce that. You don't want to pay tax on that. Why? Because that was not your personal benefit. Yes or no? So if you want to reduce that 10,000 towards the official use of credit card, you will have to give some evidence. What will be the evidence? No. You just have to bring a certificate from your employer. Your employer will certify. Your employer will that out of the total credit card bills which he has paid, 10,000 was for official purpose. So based on that certificate which is issued by the employer, you can reduce that 10,000. Otherwise that 10,000 also we are not going to reduce. So if you consider that any amount out of your credit card was for official purpose, which was reimbursed by your employer, paid by your employer, that amount should not be taxable as personal benefit. Do one thing for that expense which you want to reduce as official expense, yes or no? Bring a certificate from your employer. Your employer should certify that. Understanding? So note, expenses for charged to the, paid or by the, shall not be as in the hands of, and such expenses to be from the, subject to, number 1, complete details of such expenses to be maintained by the employer gives a certificate for such expenses to effect that such expenses are incurred wholly and exclusively for, based on this thing only the official expenses will be reduced. Understood? So how many benefits? Fringe benefits. First one, interest benefit. Second one, traveling, touring and accommodation. Third one, meals. Fourth one, gifts. Fifth one, credit card facility. Credit card. And sixth one is club facility. Sixth one is, now you are taking the benefit of any club, recreational activities, entertainment purpose, you are using some club, yes or no? You or any of your household members. So you or any of your household members are taking the benefit of any club. Club facilities you are taking. And the expenditure on that club facility is incurred by employer. Isn't it a personal benefit? How much? How much personal benefit? The amount actually spent by the employer or reimbursed by the employer for this club facility will be your personal benefit, will be fully taxable, minus amount recovered from you, if any. That's it. But don't worry, this value will also be calculated and will be given in the question. Just pick up that value and show it taxable. Will you be able to do it? But wait. Sometimes the club facility is not personal in nature. Sometimes it can be official also. Possible. Some business guests have come and you are actually hosting them. So that guests are not your guests. They are the guests of your employer. And to host those guests, what you can do? You can take those guests to some club. You will do some recreation for them. You are not going to dance for them. Okay. But what are you going to do? You are going to take them to the club. You are going to do their hospitality. You are hosting them. Yes or no? So amount will be spent on that also. And out of the total expenditure incurred during the year on the club facility for yourself, for your household member, along with that, this was also spent by the employer. Don't you think this is not a personal benefit for you? This should not be taxable. So if you want this amount, you can reduce this amount also. Why? Because this is not in the nature of any personal benefit in your hands. Why? Because this club facility was not taken by you or any of your household member, rather it was taken for some business guests which you were hosting. Hospitality you were doing. So you took these guests of your employer to some club, and on that, if the money is spent by the employer, that should not be treated as your personal benefit. Yes or no? So out of the total benefit in the year, if some benefit is of official nature, you can reduce that. Because that is not a personal benefit, that is a benefit of official nature. Should not be taxable. Reduce that. But you will say and we will reduce. We'll have to bring a certificate from the employer. Employer will certify that out of the total club expenditures which the employer has incurred for you and your household members, this much was official. If the employer certifies that, that amount you can reduce. Understanding, everyone? But along with the club facility, the regular expenditure the employer will incur, that is your benefit, that is taxable. But sometimes the annual club fees, etc., is also paid by the employer. Don't you think if the annual fees are paid by the employer, even that is your personal benefit? So what expenditure the employer will incur? Will the employer incur only the regular expenditure on the club facility, or he might also incur the annual fees also? So even that annual fees paid by the employer will be taken as your benefit if it is paid for you or any of your household member. So expenses including annual or periodical fees incurred in club by the employee or any member of his household, paid or reimbursed by the employer, minus the recovery from the employee. But out of these expenses, some expenses are official. You can reduce that expenses subject to this note. Read the note. Paid or by the, for, shall not be, as a, in the hands of, and such expenses to be from the above value, subject to complete details of such expenses to be maintained by the, and employer gives a certificate for such expenses, certifying that the expenditure was wholly and exclusively incurred for official purpose. Understanding? Will you be able to calculate this value? Sure, no? Sure. But no need to calculate. This value will be given in the question. What are you supposed to do? Pick up that value and show it taxable in your salary statement. Will you be able to do it? Okay. First of all, now you might have seen some companies, some organizations provide you recreational facilities through club, etc. Then the benefit will be taxable. But sometimes it might also happen that these recreational facilities are provided inside the office only, uniformly to all the employees. Like health club is there inside the office premises. Some sports and similar type of facilities are also there in the office premises. You might have seen many big companies are there. In those companies also, a separate area is only there. So you work for the full day. While working, if you are getting bored, so there is a separate area. Carom board is there, billiards table, snooker table is there. Play snooker for some time, play table tennis for some time. Carom board is there, play some carom board. One small swimming pool is there. Some health club is there. Yes or no? Yoga hall is there. So you can recreate or you can take the entertainment inside the office only. Yes or no? Some health clubs, sports facilities or similar type of facilities are provided by the employer inside the office premises only. And this facility is provided only to single or 2-3 employees or uniformly to all the employees. All the employees can take the benefit of this facility, yes or no? So will the employer incur some expenditure on these facilities? Will the employer incur expenditure on these facilities? But out of that, how much benefit is happening to which employees? Cannot be determined. See, the total cost which the employer will incur on these facilities for the full year is 50 lakh rupees. Health club facilities there, sports facilities are there, different recreational facilities are provided in the office. The total expenditure employer is incurring 50 lakh rupees. But that 50 lakh is not incurred for 1 or 2 employees. It is uniformly for all the employees. But out of that 50 lakhs, how much benefit is happening to which employee? Cannot be ascertained only. Hence, the benefit is fully exempt. Will you remember this? So, will you charge this amount? Will you charge any amount out of this in the hands of employee? The answer is no. Because out of this amount, how much is taxable for which employee cannot be determined. Hence, the value is fully exempt. Hence, the value is fully. Now, sometimes initial fees is paid by the employer to obtain corporate membership of a club whose benefit is enjoyed by the employee or any member of his. Now what is happening? An individual employee is not getting a club facility or his household member is not getting a club facility. Now the company is taking a corporate membership of any club for all its employees. So the company is going to a club and paying a lump sum amount to that club, saying that club, we are giving you 5 crore rupees. How much? Now, any of my employees and their family members will come in your club. You are supposed to let them enjoy the facility of the club. So, initial membership fees paid by company, paid by the employer for all the employees and their household members. Yes or no? That is known as corporate membership. What will you call it? Corporate membership means single payment made by the employer to the club, and the benefit of that payment will be available to all the employees and their household members. Now tell me, out of this amount paid, how much will be your benefit? Difficult to identify or determine. Because out of the total payment made, how much benefit is happening to which employee cannot be ascertained. Some employee might be using the club full time. All the family members are also going. And some are not going only. Yes or no? How much benefit is happening to which employee out of this total payment? How much benefit is happening to which employee cannot be ascertained. Hence, benefit is fully exempt. Understanding? So, if you see any of these benefit, will you charge it or you will exempt it? What will be the taxable value of this perquisite? Nil. In the bracket, you are going to write fully exempt perquisite, outer column nil. Understood? Next one. Movable asset given for. Are you an employee? Getting movable asset from your employer? Why are you getting it? For using. Are you becoming the owner? Or you will use it and once the use is over, you will have to return that asset. So can I give you one television for use? Can I give you one air conditioner for use? Can I give you some furniture, etc. for use? Any type of movable asset. What did I say? Any type of movable asset given by the, to the, for For once the use is over, you will become the owner, no? Or you will have to return it. Remember, ownership is not transferred. What did I say? Ownership is not transferred. Once the use is over, the employee will have to return that asset to the employer. Employee will have to return that asset to the employer. So whenever any movable asset is given for use by the, to the, then for that use, the benefit will happen. By using that asset, the benefit will happen to the employee. That benefit by using that asset is also a perquisite. That benefit by using the asset is also a, how much? You already know that. 10% per annum of the actual cost of that asset, if that asset was owned by the employer. Or if that asset was taken on rent by the employer, then actual rent paid by the employer, higher charges paid by the, will be your benefit. So if I am taking that asset on rent and giving that asset to you, are you going to use that asset? Yes or no? What will be your benefit? The amount which I have paid as rent will be your benefit. Because if I would not have paid that rent, you would have to pay that rent to use that asset. Yes or no? Which you are not paying, you are saving. That is your benefit. Understanding? But what if the asset belongs to me and my asset only I am giving for use? Then I will give you that asset. You are using that asset. By using that asset, how much benefit will happen to you? 10% per annum of the actual cost of that asset to your employer. Will you check the WDV? Or will you check the actual cost? Actual cost of the, to the employer. To the, you will take 10% per annum of that actual cost. Yes or no? So for example, I am giving you some refrigerator for use. Actual cost of that refrigerator was 1 lakh rupees. How much? So how much will be your benefit? 10% of 1 lakh will be, that 10,000 is per annum. That 10,000 is, meaning if you will use that refrigerator for the full year, then that 10,000 is your taxable value. Now you will have to check. If nothing is mentioned in the question, means that given for full year. Yes or no? But if the question says that the refrigerator was given for use from 1st of October, then October to March, how many months? 6 months. You are using the asset only for, and still taxing 10,000. Answer will be wrong. Because that 10,000 is not the benefit for 6 months. That 10,000 is per annum. Because 10% was per annum. So that 10,000 will be the benefit if you are using that refrigerator for full year. How much you are using? So into 6 upon 12. How much will be the benefit? But what if that refrigerator I have given to use from 23rd of January? You started using it from 23rd of to 31st of March. So 23rd to 31st will be how many days? Calculate in days instead of months. Now the calculation will be done in days. Tell me. How many days? 68 days. How come? How many days are there in January? Tell me. 31 days are there. You started using from which date? So first 22 days you were not using. January first 22 days you were not using. You started using from 23rd. So 31 minus 22. 31 minus first 22 days. 9 days in January. 28 days in February. And March 31 days. 68 days. So that benefit which you have calculated, 10,000, is for full year. So 10,000 divided by 365 multiplied by 68. Understanding? How much is the benefit? 1,863. That will be the taxable value of perquisite. And if you calculate 10,000 and charge this entire 10,000, your answer will be wrong. Because that 10,000 is what? 10%. And that 10% is per annum. So if the movable asset belongs to the employer, if the movable asset belongs to the owned by the employer and given to the employee for use, how much benefit will happen? 10% per annum of the actual cost of that asset to the employer. That will be the benefit. Yes or no? But what if that movable asset was taken on rent by the employer? So actual rent paid for that period for which you have used. Actual rent for that period for which you have used. So you have to check that employer has paid rent. Employer has paid rent for full year. But are you using for full year? The period for which you are using the asset, for that period whatever rent is paid by the employer, that amount will be your benefit. Now whatever benefit which is happening to you, either 10% or actual rent paid by the employer, out of that whatever amount which is recovered by the employer, recovered by the employer from the employee, that amount will be reduced. So this benefit is given and out of this is recovered. So whatever is recovered should not be taxed. Reduce that. Understanding? Everyone? Which movable asset? Which movable asset? Any movable asset, any type of movable asset given for use. The perquisite will be determined, taxable value will be determined in this way only. Right? But one very important, very important note. Laptop or computer, isn't it a movable asset? Laptop or computer, isn't it a movable asset? If the employer has given you laptop or computer for use, the benefit will be fully exempt. Why? Any other movable asset benefit will be fully taxable and will be calculated in this manner. Yes or no? But if the laptop or computer is given for use, then the benefit will be fully, why exempt? No. It can be given for personal use also. But don't you think if the laptop is given for official use, it can be used for personal purpose also? And if the laptop is given, computer is given for personal use, it can be used for official purpose also? And in all the cases this will happen, even if it is given for personal purpose, it can be used for official purpose. It might have been, for some time it will be used for official purpose also. And if it was given for personal purpose, official purpose, then also it can be used for personal purpose. And it is very difficult to identify, next to impossible to identify, that for how much time it is used for personal purpose, how much time it is used for official purpose. So you will not be able to determine or bifurcate the official and personal benefit. Getting my point? Hence the benefit is fully exempt. No need to do any bifurcation, because that bifurcation is not possible only. Because it can be used both for official, personal together. Understanding? And it becomes impossible to identify the official and personal use. Hence the value is fully exempt. Taxable value will be nil. Many times in the examination they test you this point. Important point. And the more questions you will solve, this particular thing you will remember also. Don't worry. And we are going to start with the question solving also. Okay, no? Very soon. Now, transfer of Can you transfer any movable asset? Okay, sorry, can your employer transfer any movable asset to you? Transfer means what? Meaning the ownership of the asset is given to you. And will you get any benefit out of that? How come? Employer will transfer an asset to you and there will be a benefit to you. How come? The value of that asset is 5 lakhs and that asset is transferred to you for only 2 lakhs. Then there will be a benefit, no? The value is high and sold to you, transferred to you for a concessional price or free of cost. Possible or not? There will be a benefit. How much benefit? Value of the asset as on the date of transfer minus the amount recovered, if any. Hello, sir. And that amount recovered can be zero also, can be less as compared to the value of that asset. So you have to first calculate the value of that asset as on the date of transfer. So the date on which the asset is transferred to you. What did I say? The date on which the asset is, on that date, you are supposed to calculate the value of that asset. What is the value of this asset as on the date on which it is transferred? That value will be higher. That value will be, and the amount recovered from you will be lower. Or there will be no recovery only. So the difference between these two amounts will be your benefit. What if the value is 5 lakhs and the employer is recovering 7 lakhs? Benefit of 2 slabs. Value is, employer is recovering. Is there any benefit? Then this perquisite will not arise only. This perquisite is going to arise only if the value as on the date of transfer is more, but the amount recovered is less as compared to this value, or no amount is recovered only. Then there will be a benefit. How much will be the benefit? Simple. Value of the asset minus amount recovered. Value of the minus amount. Value of the minus the amount. And value of the asset? Actual cost to the employer minus depreciation. That will give you the value, no? Depreciation means wear and tear. Depreciation means, and wear and tear means depreciation. Now you will reduce what? Depreciation. Why are you going to reduce the depreciation? Tell me. Because after buying the asset, immediately that asset is not given to you. Employer will first buy the asset. Employer will first buy the, use that asset in the business. After using that asset in the business for some time, that asset will be given to you. That asset will be transferred to you. I have purchased one asset. After purchase, I am using that asset in my business. After using that asset in my business for some time, I am transferring that asset to you. So the date on which I will transfer, will the asset have the same value, equal to actual cost, or the value will come down? Depreciated value. So I will have to reduce the depreciation. But the depreciation, meaning the wear and tear, will be reduced only for completed year of use. Will be reduced only for, and at the rate and at the method which we are prescribing. Understanding? Don't apply your rates, we will tell you. Don't apply your method, we will tell you. Rule will tell you. So what are you going to do? Come on, tell me. Employer is transferring what? Immovable asset or movable asset? To whom? Meaning the ownership is given. That ownership can be given free of cost. Alright? Benefit is there. That benefit is known as perquisite. The value of that benefit, as per rule 3.7, we have to determine that value, and that will be taxable in the hands of employee as his income from salary. Now, how to determine this value? How to determine this? First, we have to calculate what? Value of that asset. Value of that. So, how to calculate this value? First, take the actual cost. First, take the minus the wear and tear means depreciation. For, please be very careful. Employer has bought, employer has purchased, used in the business, yes or no? And after using, the employer is selling you. So after the employer has purchased and before he is selling you, the asset is used. Only then wear and tear will be reduced. So to reduce this depreciation, to reduce this wear and tear, what is the requirement? After the employer has purchased, after the employer has, the asset was used in the business of the employer. After it was purchased, before it was transferred to you. After it was purchased by the employer, before it was transferred to the employee. It was, asset was used in the business of the employer. Only then the wear and tear will be reduced. Otherwise, actual cost has to be taken. Today I bought the asset and tomorrow I am transferring this asset to you. What depreciation bloody? What wear and tear? Is there any wear and tear? The same asset I am transferring you, there will be no wear and tear. But I am buying the asset. I am using the asset for 3 years, 8 months. How many years and months? Employer has purchased the asset and used that asset in the business for 3 years and 8 months. After that, the asset is transferred to you. So tell me, after 3 years and 8 months, will the asset have the same value or the value will come down? Now wear and tear will be reduced, but wear and tear will be reduced for every completed year of use. 4th year the asset was being used, but in the 4th year it could not be used for full year. 3 years full and 8 months in the 4th year. 8 months ignore. 8 months you will reduce the wear and tear only for completed year of use. And how many years of complete use? 3 years. So for 3 years wear and tear will be reduced. At what rate? 20% on WDV basis. If the asset transferred was motor car. If the asset transferred was, then the wear and tear will be reduced at what rate? On what basis? So if the employer is transferring you motor car, employer is transferring you, wear and tear will be reduced for every completed year of use. At what rate? And on what basis? Okay. If the asset transferred was not motor car, asset transferred was computer, laptop or electronic gadget. Now many people confuse here. Sir, you said that computer, laptop, exempt perquisite. Exempt, no? Only if it is given for use. Am I giving the computer or laptop for use or I am transferring? Then the value is not exempt. Only if it is given for use, then the value will be exempt. But if it is sold, then the value will be taxable. Wear and tear will also be reduced. But the wear and tear will be reduced at what rate? 50%. WDV basis. What basis? And what rate? Motor car, computer, laptop, electronic gadget, computer, laptop, electronic gadget transferred, then 50% WDV. Any other asset which is not a motor car, not a computer, not a laptop, not an electronic gadget, any other asset, yes or no? 10% SLM, straight line method. Understanding? Hello, sir. So, 10% on what basis? Straight line basis. For motor car, no? Then, any asset which is not a motor car, which is not computer, laptop or electronic gadget, all other asset, 10% SLM. But see, this is the rate at which the wear and tear means depreciation will be reduced. This is the method at which the depreciation will be reduced. Yes or no? But it will be reduced always for a completed year of use only. For the fraction of the year, no reduction in the value. Understanding? Usually in the accounting, what we do? If the asset is sold on 30th September, so we charge depreciation till 30th September. In the accounting, we do that only, no? But are we doing accounting or taxation? In the taxation, if the valuation rule tells me to reduce the depreciation for completed year of use, I will have to reduce the depreciation for completed year of use only. I cannot apply my accounting logic over here. Sir, but in the accounting this happens. No, in accounts that you do, no. There you have to do like that. What if you have purchased one asset from 10th of June? So you start charging depreciation from 10th of June. 10th of June to 31st March. Then for the next year, again from 1st April onwards. Yes or no? And you charge that depreciation till the time the asset is sold. Here, don't apply those accounting logics. Simple. Every completed year of use. So you have to check that when the asset you started to use. Employer started using that asset from which date? From that date, every completed year of use, you have to reduce the wear and tear at this rate by using this method. Okay. Now see, computer we know, laptop we know. What is the meaning of electronic gadget? I'll give you some example. You tell me that whether these assets are electronic gadgets or not an electronic gadget. Okay, no? Tell me, the air conditioner is there. Electronic gadget, yes or no? Air conditioner. Electronic gadget? Sure? Okay. Mixer grinder. Microwave oven. Refrigerator. None of them is an electronic gadget. Yes, yes, yes. All of them are electronic home appliances. They are not gadgets. I am talking about electronic gadgets. Sir, my iPad. It is an electronic gadget. Smartwatch. Electronic gadget. Mobile phones. Electronic gadget. Tablet. Electronic gadgets. Getting my point? That power bank, hard disk. Hard disk are there, no? Electronic gadget. Printers. Electronic gadgets. AC. Electronic gadget. Mixer grinder. Electronic gadget. 2 minutes back, you only were saying that these are electronic gadget. Now why the answers have changed? Because now you know what is electronic gadget. So for AC, if the employer has sold AC to you, will you reduce wear and tear? Yes. At what rate? 10% SLM. Motorcycle. 20%. Motorcycle 20%. Motor car has 4 wheels. For motor car you reduce 20% WDV. Motorcycle 10% SLM. Understanding or not? This computer 50% WDV. Laptop, iPad, camera 50%. Then speaker 50%. Yes or no? Music system 50%. Projector These are all electronic gadgets. Understood? Should I move ahead? I'll give you one example. You're going to solve that example for me. Important, huh? Even this perquisite is many times asked in the exams. Okay. So, example. And just after this, we are going to start with the questions, huh? ABC Limited is the name of the employer. Okay. Acquired a motor car on 1st of June 2022 for rupees 10 lakhs. ABC Limited is your employer. Employer has acquired a motor car on 1st of June 2022 for 10 lakhs. After using the above motor car, in its business, the same was sold to one employee, Mr. Gokul. No, Kamal. Kamlesh. Okay, now? So sold to the employee, Mr. Kamal, on 20th May 2025 for rupees 5,50,000. Determine the taxable value of perquisite. if the motor car is purchased on 1st of June 2022, if nothing is mentioned, the employer has started using from 1st June 22. So first completed year of use. First completed year of use. 1st June of 22 to 31st May 23. Second year of use. 1/6/23 to 31st May 24. Third year. 1/6/24. 31st May could not be used. Before that only, on 20th May 2025, it was sold. So can I say this asset is used by the employer for 2 years, 11 months, 20 days. 11 months and so third year use started, but third year full year use is not there. So how many completed year? 20 days, no? 20 days, no. Only 10 days. 10 days. 11 months, 10 days. Right? No? Because on 20th, if the vehicle is sold. 20 was okay. 20 was okay. On 20th, if the vehicle is sold, so it is used till 20th May, meaning 11 months and 20 days. Third full year use is not there. So for the third year, will you reduce the wear and tear or you will not reduce? Sure, no? So for only 2 years it will be reduced. So first of all, I will write what? Actual cost of what? Motor car. What was the actual cost? 10 lakhs. Minus wear and tear. First year and second year and third year. First year, second year and third year. Nil. Nil for the third year. Why? Because for the full third year, the asset was not used in the business of the employer. So for the first year, how much? 10 lakh into 20%? Yes or no? That will be 2 lakhs. That will be 2 lakhs. I will write down 10 lakhs in the outer column. Now, second year, how much? Again, 20%. But now that 20% will not be on 10 lakh because it is on WDV basis. Hello. So that will be on 8 lakhs. So 8 lakhs. How come 8 lakh? 10 lakh minus 2 lakh will give you 8 lakh, no? 8 lakh into will be 1 lakh. And for the third year, there will be no wear and tear. Understanding? So how much will be the total wear and tear? Reduce this 3 lakh 60 out of 10 lakhs. 6 lakh. This is the value of the car. So as on the date on which the car is sold, no, it will be assumed as if the value of the car is 6 lakh 40. Now this car, value of the car is 6 lakh 40, is sold for how much? For a higher amount or a lower amount? 5 lakh 40, no? 5 lakh 50. Sorry, my mistake. 5 lakh 50. This is the selling price. Selling price is lower than the value. How much is the benefit? This will be the taxable value of perquisite. Very easy to calculate. Instead of motor car, if it was computer, laptop or electronic gadget, then everything remaining same, we would have done 50%. If it was air conditioners, 10% SLM. So whatever depreciation was there, same would have been here. Understanding? Now what if I change the date to 20th June. Instead of 20th May, it was sold on 20th June. So can I say after 31st May, after completing the 3 years and 20 days. So in the 4th year of use, it is sold, but 4th year, full use cannot be done only for 20 days. And for those 20 days, there will be no depreciation for full 3 years. So 3rd year depreciation will be how much? 1,64,000. 1,28,000. So reduce that 1,28,000 also. 5,12,000. Now tell me, 5,12,000 is the value and the asset is sold for 5,50,000. Will there? No. There is nothing like loss. Value is 5,12,000, sold to you for how much? 5,50,000. Is there any benefit? No. So you'll write down, since the amount recovered is more than the value of the asset, depreciated value of the asset, hence there is no benefit arising in the hands of employee. Taxable value will be nil. Even if the asset is transferred, there will be no taxable value. Why? Because the value is lower as compared to. Now you understood why I took 20th May. If I would have taken 20th June, no, the value would have been negative. You would not have understood anything. Understanding right now? Now, this was your perquisite. Now see, meaning of electronic gadgets, I have already written. Please check. Data storage and handling devices like smartphone, tablet, iPad, printer, scanner, CCTV camera, etc., etc., etc. And if any movable asset, wait. One question is there. Should I ask you one question? Pay attention. Huh? If I say that a scooter is there, scooter, it is a motor car, no? 20% WDV, no? Or 10% SLM. Now this scooter was purchased. The scooter was purchased by the employer on 9th of June 2015. Scooter was purchased on 9th June 2015. And since then, the scooter was used in the business of the employer. And this scooter was sold to employee on 15th of June 2025. Possible or not? How many years used? Count properly. 9th June to 9 June 15 to 9 June 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. 9th June 25. 10 full years. After 10 years and some days, the scooter is sold to the employee for rupees 5,000. For rupees, the scooter was purchased for 1 lakh rupees. Possible? Hello? What will be the taxable value? After 10 years, no, the value of the scooter will become 0. Why? 10% SLM basis. So any movable asset other than motor car, other than and computer, laptop or electronic gadgets, any other movable asset, after 10 years of use, its value will always be 0. So if 10 years or more, if it was used by the employer and then it was transferred, then there will be no perquisite. Why? Because after 10 completed year of use, the value will become 0, and against that 0 value, if the employer is charging 5,000, there is no benefit arising to you because value has already become 0. But this can be the case only for all other assets, where the depreciation is charged on SLM basis, 10%. Yes or no? For motor car, computer, laptop, electronic gadgets, the value will never become 0. Why? Are reducing balance, no? WDV. And in WDV, the value of the asset never becomes 0. It always becomes 0 in the case of SLM basis. Understanding? Done, sir? Should I move? Okay. Pay attention. Last one. Employer is giving any other benefit, facility, amenity, service, privilege to the, even that will be treated as, and the value will be taxable. What will be the value? Simple. The cost incurred by the employer under arm's length transaction will be the benefit. If the employer has incurred any cost on that benefit, will now be your benefit. Yes or no? So to give you any benefit, to give you any privilege, to give you any service, to give you any amenity, whatever amount of cost the employer has incurred will be your benefit minus the recovery from the employee. Understood? One very important note over here. Read this note. Now the employer is giving you telephone facility, mobile facility. Possible or not? Your mobile bills are paid by the employer. Telephone bills are paid by the employer or reimbursed by the employer. So this is any other benefit, but it will be fully exempt. Why? Mobile phones can be used for official as well as personal. Telephone facility can be used for official as well as personal. How much will be official? How much will be personal? Cannot be ascertained only. Hence the value should be fully, taxable value will be nil. Understanding? So your mobile bills, your telephone bills, reimbursed by the employer, paid by the employer, the taxable value will be 0. But wait, 5,000 rupees per month, 500 rupees per month given to pay mobile bills. That is an allowance. That will be fully taxable. Because a fixed amount is given for meeting the telephone expenses, which you have yet to incur. Yes or no? But here, whatever amount is incurred, that is reimbursed. This is perquisite. Perquisite will be fully exempt. But if it is an allowance, then it will be fully taxable. Please remember this, huh? And this thing was asked in last to last attempt, if I'm not wrong, January or September exam. The same thing was asked. Understanding? In the question, there was some small adjustment. So that the differentiation could not be done properly. It was an allowance. Sorry, it was a perquisite, but the students considered that as allowance and charged it. But it was not an allowance, it was a perquisite, it was getting exempt. But the students, by mistakenly, many of the students took it taxable. So what is an allowance? Fixed amount given on a regular basis to meet certain expense before that expense is incurred. Yes or no? Hello. That is an allowance. But what is a perquisite? After the expense is incurred, the benefit for that expense coming from the employer. Getting my point? The expense is incurred by you, employer will reimburse. Expense is incurred by you, employer will pay. First expense has to be incurred. And for that expense, which is of personal nature, employer might make the payment or employer will reimburse. That is what? That is a perquisite. So your telephone expenses, your mobile bills, which are paid by the employer, reimbursed by the employer. First the expense will happen. Then the payment or reimbursements will happen. That is perquisite. Getting my point? But a fixed amount is given to meet such expenses, then it is an allowance that will be fully taxable. Understanding? Sure? Now the provisos are there. But before that, let's go and solve few questions. Ready? Not ready? Ready, not ready? Ready? How many illustrations we have already completed? Please check. Starting from 1. Starting from 1, huh? Let's first discuss. Let's first check. Illustration 1 done. 2 is done. 1 and 2. Are you writing what is there in that illustration? Which concept is tested? In the first illustration, which concept was tested? HRA, no? Now second illustration we have already done. Second illustration is for allowances. This illustration is for allowances. The concept of allowances is tested. Yes or no? Third one is pension. We have already done. Fourth one, gratuity. We have already done. Then fifth one will be leave salary. Done, no? Sixth is pending. Guys, sixth is pending, if I am not wrong. Yes, sixth is pending. That we are going to do today, later on. Sixth is pending. Seventh is also pending. Eighth one, pending. 6, 7, 8. Keep it pending. After Provident Fund concept, we are coming to this 6, 7 and 8. Yes or no? Then ninth one. Ninth one was for what? VRS. Done, no? After ninth. 10th is there. 10th one. 10th. Not yet done. Later on. 11th one. 11th is on page number. Okay. Write down, besides this, write down LTA. LTA. Leave Travel Assistance. So today, 2 more perquisites are remaining. One is medical facility and second one is LTA. After we'll do LTA, no, we'll do this question. Okay, no? 11th and 12th, both the questions are for LTA. Leave Travel Assistance. 11th and 12th. 13th question is on medical facility. Write down medical facility. So 2 more perquisites we are supposed to do. One medical facility and the second one is LTA. Then question number 11, 12 and 13. These 3 questions will be done. Okay, no? From 14th to 18th we have done all the illustrations. 14 to 18. All the illustrations are for perquisites. Yes or no? Which perquisite? Accommodation. 14th to 18th. All the illustrations on one perquisite. Accommodations. Yes or no? Come to 19th. 19th, have we done this? Have we done this? Start. Besides this, write down domestic servants. Domestic servants. I want to see whether you remember something or not. Come on, start. Do you remember I told you that if the employer has engaged domestic servants and provided to you, then it is a clause 3 perquisite. Taxable if you are a specified employee and not taxable if you are not a specified employee. Yes or no? But what if the domestic servants are engaged by you and the employer pays their salary or reimburses their salary? Then it is not clause 3, then it is clause 4 perquisite. Your obligation met by employer. Taxable if you are a specified employee, and even if you are a non-specified employee, then also it will be taxable. Have I told you this? Same concept is there in the question. Same concept. X and Y are working for Gamma Limited. As per the salary fixation norms, the following perquisites are offered. Mr. X, for Mr. X, who engaged domestic servant? Who engaged domestic servant? Mr. X, who engaged domestic servant? Employee only has engaged domestic servant. Yes or no? And 500 per month is the salary. Now who is liable to pay this salary? Employee. If the employee has engaged the servant, who is liable to make the payment? Whose liability? Whose obligation? But is employer reimbursed the? Tell me, is it a clause 3 perquisite or a clause 4? Write down. This is a clause 4 perquisite. Clause 4. Now, if Mr. X is a specified employee or a non-specified employee, will not make any difference. Whatever amount reimbursed by the employer, 500 per month into 12, 6,000. Yes or no? Will be fully taxable in the hands of Mr. X. Yes or no, sir? Now, for Mr. Y, for Mr. he was provided with a domestic servant. That domestic servant was provided by the employer, meaning who has engaged? Employer has engaged and provided. Clause 4 or clause 3? This will be clause 3. 17 subsection 2 clause 3. Yes or no? Very important. Mr. X who engaged and Mr. Y was provided. Yes or no? Now, what will be the taxable value? The amount of salary paid by the employer to that servant minus the recovery, if any, from the employee. So how much salary the employer pays to that servant? 500 into 12, 6,000. Yes or no? Minus any amount recovered from Y. No amount recovered from Y. Nil. So that balance will be 6,000. It will be taxable in the hands of Y only if Y is a specified employee. Yes or no? You are required to comment on the in the hands of Mr. Who are? Ayo. If Mr. X is a non-specified employee, then will it make any difference? That 6,000 will be taxable in the hands of Mr. X. But if Mr. Y is a non-specified employee, then? If Mr. Y is a non-specified employee, then for him the perquisite will not be valued. It will not be taxable because it is clause 3 perquisite coming in the hands of Mr. Y, not taxable in the hands of non-specified employee. Can you comment like this in your language? You will not be able to comment like this. Yes or no? Will you be able to comment like this? The question is asking you, comment on the taxability. You are just supposed to show, is it taxable or not? If yes, then why? If no, then why? For Mr. X, what will you write? Since Mr. X has engaged his domestic servant and the salary of such servant is paid by the employer, hence it is a perquisite taxable under 17(2)(4) as it is employee's obligation met by employer, taxable for all types of employees, whether specified or non-specified. Done. Clause number, second one. Since the domestic servants are provided by employer to Mr. Y, it will be a clause 3 perquisite, taxable only if the employee is a specified employee. Since Mr. Y is not a specified employee, the benefit will not be taxable in his hands. Taxable value will be 0. That's it. Same thing is written, huh? Please read at home. Okay? Question number 19 done. 19 done. Come to 20. Come to 20. Okay. Mark this question important. Now this question number 20 which you are going to solve, no? This will test all the concepts which you have studied so far in salary chapter. Retirement benefits are also there. Then normal type of salary is also there. One or two perquisites are also there. Okay, no? So everyone, whatever you remember by looking at this question, okay, no? I want all of you to do that. And if you get the questions in the exams on salary, the questions will be framed like this. This type of question can come. Okay? Start. But now that test will have salaries chapter also. Full chapter, huh? This Sunday. Today is what? Friday. Not this Sunday. Next Sunday. Right now? So next Sunday till salaries. Everything. Sure? Okay. I will arrange one test for you. And then on Sunday only, one more test you are going to write. PGBP. Because I am going to start with PGBP just after this chapter. And before Sunday we are going to wind up. Next Sunday I am telling you. Understanding? Okay. Guys. Shall we start? No? Mr. X retired from services of Y Limited. Meaning he is a government employee or a non-government employee? Government employee or a non-government employee? This is 31st January 2026. What is this date? This is the date of retirement. Now see, if I'll make a small timeline here. Okay, now? One small timeline I'm making. What is my previous year? Tell me. Previous year 25. In my previous year, Mr. X is retiring. So can you tell me the DOR, date of retirement? DOR, date of retirement is 2020. Now see, on this date, at the time of retirement, following things he is receiving. So as on the date of retirement, he is going to get what? He is getting a gratuity also. Yes or no? He is getting leave encashment also. He is getting pension also. Apart from that, he is getting a gift. He is getting two gifts. One from employer and another from colleagues. Yes or no? Okay. One gift from employer, another gift from colleagues. What other things he is getting? On the date of retirement, his employer is giving some perquisite also. Ayyo. Hello. What perquisite he is getting? Use of movable asset or transfer of movable asset? Motor car transferred on his name. Yes or no? This everything is happening on 31st January. Yes or no? Now pension he is getting, gift also getting, perquisite. Yes. Apart from that, any other thing he is getting? If you will read the question, you will come to know. Question says that as on the date of retirement, hello, after completing service of 30 years and 1 month, he is retiring on this date. Yes or no? He joined the company in 1996. Till then, since then, till today, 30 years and 1 month, he has completed service and he is leaving right now. At the time when he joined, he was 30 years old. At the time when he joined, he was 30 years old. So today he is, why? Because when he was 30 years old, he joined, and after completing 30 more years, today he is 60 years old and he is retiring. Yes or no? On his retirement, what did I say? On his, meaning as on this date, he is getting gratuity also, leave encashment also, he is getting what? A car also, which is transferred on his name. Then he is getting a pension also. Then company is giving him gift. And his colleagues are also giving him LCD television. So this he is getting as gift, then pension, then leave encashment, then gratuity, and then another perquisite. All these things he is getting on his retirement on 31st January. Now tell me, prior to 31st January, was he working? No? No? Prior to 31st January, was he working? So what he was getting at that time? Salary? How much? Basic salary 20,000 and 50% dearness allowance. Yes or no? From 1st April to? So can I say in this timeline, for this entire period, he was getting basic and DA. On his retirement, he is getting all these amounts. Yes or no? After retirement during this year, will he get anything? After retirement, during this previous year, after retirement, 2 more months are there, no? February and March. Will he get anything? Yes. Uncommuted pension. See, in the question they are telling you that he received a pension of 5,000 per month from February to March. So for these 2 months he is going to get how much? Pension. Now did you understand what happened during the entire previous year? Now this entire thing you are supposed to present in a format. But you have to take only the taxable amounts. So basic salary entire taxable, DA entirely taxable, then uncommuted pension for February and March entirely taxable, but the gratuity will not be entirely taxable. Some amount will be exempt and the balance will be taxable. That exemption you have to calculate, reduce it, the taxable amount you will get. Understanding? Likewise, leave encashment. Hello? Likewise, commuted pension. Then for perquisites also you will have to calculate the taxable value. Gift also you will have to calculate the taxable value. Yes or no? Now all these taxable value you have to calculate and you will have to show in a statement. Taxable income under the head salary. Salary head, a statement has to be made. So what are you going to do? Come on, tell me. Name of the assessee. What is the name of the assessee? Mr. X, no? Mr. X. Presentation you will do in the same exact manner in which I am doing. Yes or no? Individual. Individual. ROR. PAN. Dash. Done, sir. Which is the previous year? Assessment year. And for this previous year in the assessment year, what are you supposed to do? What the question is asking you to do? Compute his gross total income. Yes or no? Assuming he is exercising the option of, meaning he is following 115 BSc, not following 115 BSc. Sure, not following? Okay, now what I'll write here? Computation of what? Gross total income. Now to calculate this gross total income, he needs 5 heads of income. First, salary head. Yes or no? Salary head, directly income they have not given. First I will have to calculate the salary head. What they will do? Either they will give you the income of that head or they will give you the details of the head. You calculate the income. Then they will give you the details of house property head. Calculate house property head, or they can give you the house property head income. They will only calculate and they will give you. In this entire question which you have read, did you see details of any other head? Meaning only salary head is there. So only salary head will be calculated, other heads will be nil. total will be gross total income. Yes or no? So how will you calculate? See, first of all, first column you will make for particulars. And now how many columns for rupees? One column or two columns? One column or two columns? Two columns. See, since in this question, no, other heads are not there. Other heads are, so two columns for rupees are sufficient. If other heads were also there, then three columns for rupees. How many columns? First two columns for working and the last column taxable amount of that head. Yes or no? Since other heads are not there, whatever taxable amount of this head will be there, we'll write down directly in the outer column. And outer column total will be what? The taxable income only. Yes or no? So, please check. In the particulars, we are going to first compute what? Income under the head salary. Hashtag income under the head what? Salaries. Underline. Now under the head salary, since the beginning of the year, what he is getting? Salary, no, basic salary. So first we'll write basic salary. How much monthly basic? How much? 20,000 per month. For 12 months, no? Please multiply 12, no? Why 10? Because January he is retiring, so he is not going to get basic for February and March. He is going to get basic only till January. So basic salary, in the bracket you will write down 20,000 per month into 10 months. Entire amount is taxable, no? Write down outside, outer column. How much? 2 lakhs. Then after basic, what he is getting? What is dearness allowance? How much? Can I say 20,000 per month into 50% into 10 months will give you 1 lakh. That is also fully taxable. Are they telling you that the DA is in terms, not in terms? What are you going to do then? The DA is in terms, and I will prove also that it is in terms. Proof I will give you a little bit later, but no need to assume, huh? DA is in terms. That is sure. There is a hint in the question. That hint will prove that the DA is given in terms. And that we will go and we'll write a note about that. Getting my point? That DA we have taken as in terms because the DA is considered for retirement benefit. And for which retirement benefit this DA is considered, I will tell you. Okay? So DA is in terms taxable. Now tell me, apart from these two items, what he is now getting? Now he is retiring. So on retiring, he is getting gratuity. So write down gratuity. Gratuity on what? Retirement. How much gratuity, guys? 6 lakhs. Inner column. We are going to write down in inner column. Why? Because out of this some amount will be exempt and the taxable amount will go in the outer column. Yes or no? How much will be exempt? Exemption will be available under which section? So less exempt under section 1010. Now are they telling you that the employee is covered by Payment of Gratuity Act? Specially mentioned, no? So how much will be the exemption? A, B, C, whichever is lower. A, actual gratuity. I will write down in the particulars column only. Actual gratuity is 6 lakhs. B, maximum limit under section 1010 is, why you have taken 20 lakhs? If the employee would have taken exemption under section 1010 in any earlier year, then to that extent the limit would have been reduced. Understanding? But if nothing is given, that the gratuity was earlier exempted, meaning that entire 20 lakh limit is still available. Yes or no? Do you remember, no, lifetime maximum exemption and all? Okay. Then C. C is 15 by 26 into last drawn salary per month into number of years of service. Right now? Now 15 by 26 will remain same. I will write years of service. Years of service. Hmm. 15 by 26 will remain same. What will be last on salary? Basic and DA. Basic and of last month. The month immediately preceding to the month of retirement. So your retirement month is January. Yes or no? So immediately prior to that, December. So in the month of December, what was your basic? 20. What was your DA? 10,000. So basic plus DA, 30,000. So into 30,000 per month into years of service. See, this years we would have taken 31 years. If instead of 30 years and 1 month, it was 30 years and 8 months, 30 years and 7 months, then we would have taken 31. Number of years of service will also include the fraction of the year of service if that fraction is more than 6 months. But since the fraction was only 1 month, we have ignored the fraction. Hello, sir. So can you calculate now? 5 lakh 231. Yes or no? Color, red color. Color, red color. Exemption, can you see? And I have highlighted the exemption also. So in the inner column, what I will do? I will reduce 5 lakh 19,231 out of 6 lakhs. So I will get the taxable amount. 80,000. Everyone got this? How many of you got this correctly? Very good. Okay. Now see how this 30,000 is calculated. For that also a small hashtag you prepare here only. Yes or no? That is last drawn salary per month. This 30,000, hashtag 30,000. For that 30,000 also make the calculations here only. Basic plus DA, which is equal to 20,000 per month plus 10,000 per month, which is equal to 30,000 per month. Last drawn salary we have taken basic and DA, right now, guys? Sure. Now see, after gratuity, after he is getting pension also. Now pension two types. One is commuted, another one is uncommuted. First we will write uncommuted. Uncommuted pension is always taxable, if you remember. Uncommuted pension. How much uncommuted pension is getting? 5,000 per month, February to March. So uncommuted pension, inner column, 5,000 per month into 2 months. Can I say this entire 10,000 will be taxable? Now commuted pension also he is getting. Hello sir. Commuted pension how much? 3 lakh? 3 lakh 30 or 3 lakh? That is leave salary. 3 lakh only, no? 3 lakh, inner column. This commuted pension will also be exempt. But this will be exempt under which section? Don't tell me, I know. 1010A. How much is exempt, you know that? Huh? How much is exempt, you know? A actual amount is 3 lakhs, or B is what? B is 1/3 of what? Fully commuted pension. Hello sir, 1/3 of commuted pension or fully commuted pension? 3 lakhs is your commuted pension. But did you commute your entire pension and you got 3 lakhs? Or only 2/3 you commuted and you got 3 lakhs? What would have been the pension, commuted pension, if you would have commuted your entire pension? Hello? If out of the monthly pension you have commuted 2/3 and you are getting how much? 3 lakhs. If your entire monthly pension you would have commuted, how much amount you would have got? 4,50,000 or 9 lakhs? 4,50,000 or 9 lakhs? 9 lakhs. Your 2/3 you are commuting and you are getting how much? 3 lakhs. So entire 3/3 if you commute, how much you will get? 4,50,000, no? How come 9 lakhs? Ayyo. And after commuting that 2/3, no? 5,000 commuted, uncommuted pension you are getting. So your employer promised that how much pension you are going to get, monthly pension? 15,000. Your employer would have promised that after retirement how much you are going to get? 15,000. Out of that 15,000, 2/3 you commuted and you got 3 lakhs. So after commuting, what did I say? After commuting, 5,000 you are getting. That 5,000 is 1/3. Hello? Because 2/3 you have commuted for 3 lakhs. So tell me, this 1/3 you are going to write like this only? Hello? 1/3 of what? 1/3 of 4,50,000? No. 3 lakhs into 3/3, the whole divide by 2/3. Now maths I should not teach you. 3 will go up. 3/3 is nothing but 1. This 3 will go up and this 2 will remain here. So 3 into 3 lakh will become 9 lakh. 9 lakh divided by 2 will become 4,50,000. So this is your fully commuted pension. 4,50,000 into 1/3. 1,50,000. Everyone got this calculation? Sure? Okay. Whichever is lower. So what should I write here? Color, red color. Color, 1,50,000. Out of 3 lakh, if 1,50,000 is exempt, how much will be taxable? 1,50,000 will be taxable. This 1,50,000 will be taxable. So, guys, pay attention what I am trying to tell you again. If you read the question properly, no, you will come to know that your employer, when you retired, no, see, when you retired, at the time of your retirement, no, your employer told that a fixed amount of pension we are going to give you. That how much pension he was supposed to give you is not given in the question. But out of this monthly pension, you commuted how much? You commuted 2/3 on the same day. You commuted 2/3 on the, and after commuting, what did I say? After commuting, you are getting 5,000 per month. So that 5,000 per month which you are getting is what? 1/3. And if that is 1/3, how much should be the full monthly pension? 15,000. So monthly pension which was promised to you was 15,000 per month. Out of that, 2/3 you have commuted. After commuting, you are getting 5,000. That is 5,000 uncommuted pension that will be fully taxable. And out of your monthly pension of 15,000, you have commuted how much? 2/3, and you are receiving what? 3 lakh rupees as commuted pension. And that 3 lakh rupees of commuted pension will be exempt under section 1010A. How much? A or B, whichever is lower. A, actual amount, or B, 1/3. Why did you take 1/3 over here? Because the employee is also receiving gratuity. So on retirement, if the employee is receiving gratuity, then maximum pension, maximum commuted pension can be exempt to the extent of 1/3. But if he was not receiving gratuity, then we would have taken half of fully commuted pension. Getting my point? Sure, done everyone? Okay. Now after pension, what he is getting? Leave encashment, no? Tell me, leave encashment how much? 3,30,000. Now everyone will pay attention over here. Everyone. Leave encashment will be taxable, but after taking exemption. Because leave encashment is also received on retirement. Any leave encashment received on retirement will be exempt under which section? 1010 AA. How much exemption you are going to get? A, B, C, D, whichever is lower. So A, actual amount. A, actual amount, that is 3,30,000. B, maximum limit under section 1010 AA. Earlier, have you taken any other any exemption under 1010 AA? No. So the full limit of 25 lakhs is available. Perfect. C, 10 months into average salary per month. I will leave one line blank for this because I have to calculate average salary. Okay, no? Then D, average salary per month into leave credit also I have to calculate. Yes or no? So I will also leave one line blank. Now what I will do? Hashtag average salary I will calculate. Yes or no? This average salary also I will have to calculate. And leave credit also I will have to calculate. Understanding? So leave credit double hashtag. Okay. So first of all, what am I going to calculate? Average salary. So to calculate average salary, I will have to take 10 months. 10 months immediately prior to date of retirement, not month of retirement. So my retirement month will also be counted. Yes or no? So average salary, I will take basic Basic for how many months? 10 months. So in the last 10 months my basic was same, no? That will be 2 lakhs. Will I take DA or DA in terms? DA in terms. To calculate the leave salary exemption, I want average salary, and to calculate this average salary, I want basic, DA in terms and turnover, commission. So DA in terms. What was my DA in terms? 10,000, no? Hello? Into 10 months. That is 1 lakh. Now turnover commission. Turnover commission will be nil. Can you do the total? 3 lakhs? Yes or no? Divided by 10 months. Will give me 30,000. 30,000 per month will be the average salary. Will be the perfect. Now I want to calculate. Leave credit. How do you calculate leave credit? Very simple, sir. Very simple. Leave credit I will calculate as per IT rules also. I will calculate as per employer's rules also. Whichever is lower. Now in the question, they are saying that leave encashment of, tell me, 3,30,000. For how many days? 330 days leave balance. Leave balance means what? Leave credit. Leave balance means what? So leave credit they have calculated. How much? 330. But this leave credit they have calculated on the basis of 30 days leave allowed by the employer. How much leave your employer is allowing? So based on the 30 days leave allowed by the employer, the leave credit calculated is 330. Hello? How much IT rules says? So definitely as per IT rules also, 30 days is allowed, and as per 30 days of IT rules also, the leave credit calculated will be 330 only. Understanding what I am trying to tell you? As per employer's rules, how much leave was allowed? 30 days. How many years you worked? 30 years. 30 into 30 will be 900 days. 900, you have taken some leave. Out of 900, you have taken some leave. And how much is remaining? 330. That is given in the question. Meaning how much leave you have already taken? 570. Getting my point? So 30 days leave allowed by the employer multiplied by 30 years of service. You have got how many? How many days leaves? In 30 years, 900 days. Out of 900, you took 570 days leaves. Then only 330 is remaining. This is the leave credit, which is calculated as per employer's rules. Understanding? Now tell me, as per IT rules, how many days leaves is allowed? If you take that 30 multiplied by 30 will be 900. 900 minus 570 will be 330. As per IT rules also it will be 330. So leave credit as per employer's rules and IT rules both are same. So you will take the leave credit provided in the question because it is calculated based on 30 days. Understanding? Hello? But what if here it was given 40 days. Then this 330 is calculated based on 40 days. You will have to calculate as per 30 days. Whichever is lower, that leave credit you will have to take. Getting my point? What if it was 25 days? Then take this only. Why? Because as per 30 days, it will be higher only. Understanding? So 2 leave credit you are supposed to calculate. Number 1, as per employer's rules, as per IT rules. Employer's rules, leave credit will be calculated as per leave allowed by the employer. And IT rules, leave credit will be calculated based on maximum leaves allowed under IT rules, which is 30 days. Getting my point? So now tell me one thing. How much leave credit you are going to consider over here? Directly 330 you will write. Leave credit days, no? 330 days divided by 30 is equal to 11 months. 11 months considered. Why? Since it is computed based on 30 days leaves allowed by employer, which is equal to IT rules. Yes or no? So 11 months we are going to take. So how many leaves you have to your credit at the time of retirement? 11 months. For 11 months, how much you are getting? For 11 months you are getting how much? So 330 divided by 11. 330 divided by 11. Meaning that you are getting a leave salary for 11 months. You are getting a leave encashment for how many months? 11 months. Meaning at the time of retirement, 11 months leave are there in your credit. For these 11 months, 30,000 each month is given to you. And don't you think that 30,000 will include basic 20,000 and 10,000 DA? Leave salary is a retirement benefit. Leave salary is to calculate the amount of retirement benefit, to calculate the amount of basic is also considered, DA is also considered, meaning 20,000 is also considered, 10,000 is also considered, 20 plus 10, 20 plus 10, 30 into 11. You are getting 3,30,000. So employer is paying you leave salary, which is a retirement benefit based on your salary. Based on your, how much? 30. And that 30 will be only because 20,000 is basic and 10,000 is DA. So DA is considered as a part of your salary. DA is considered as a part of your, to calculate the amount of retirement benefit. So this DA is in terms. Even though it is not given in the question, this is a hint. Understanding? Hello? How many years you worked? Every year employer was giving how much leave? 30 days. So in 30 years, total leave allowed? Out of that, how many leaves you took? So how many you saved? 330 you convert into months. 330 you convert into, so divide by 30, it will be converted into 11 months. So we have just done the conversion. Are you getting my point? We have just done the conversion. 330 days we have converted into months. So at the time of retirement, employer came to know that 11 months leaves are standing to your credit. So how much leave credit is available with you? 11 months. For these 11 months, he is giving you what? Leave encashment. So for these 11 months, the leave encashment given is 330, meaning 30,000 per month he has given you. Hello? 30,000, 30,000, 30,000 for 11 months, amounting to 3,30,000. So to give this 3,30,000 for these 11 months, your salary was 30,000, and this includes 20,000 basic and 10,000 in DA. Whenever the DA is considered as a part of salary, to calculate your Retirement benefit, that DA is always treated as in terms. So even if they have not told you clearly that the DA is in terms, this is a hint which tells you that DA is in terms. Hence we have taken DA in terms. How much? 10,000. Understanding, everyone? So will you be able to calculate like this? Now we'll finish this. In the bracket we'll write 10 months. How much was the average salary? So how much will be this? 3 lakhs. Are you getting it or not? Now here, average salary again I will take. Just a second. Average salary again 30,000 per month. And what leave credit should I take now? As per IT rules also it is 11 months. As per income tax, as per employer's rule also it is 11 months. So 11 or 11, whichever is lower, 11. Understood now? Tell me. 3 lakh. Now A, B, C and D. Whichever is higher, no? Or lower. Which one is the lowest amount? This 3 lakh will be exempt. So this 3 lakhs will be exempt out of 3 lakh 30,000. Yes or no? How much will be taxable? 30,000 will be taxable. Understood or not? That's it. This was the most toughest part of this chapter, this question. Calculate this amount. Understanding? How many of you correctly did this thing? Nobody reached here. So what you are doing? These type of questions will come in the exam, I am telling you. If I twist this a little bit, okay, wait, see. If I say that this was based on 45 days, come on. Now what are you going to do? Based on 45 days, 330 days leave is there. If the examiner is there, he is going to do all these things. How many years of service? Every year, how many leaves you are getting? 45. So 30 into 45 will be? How much? 1,350. Minus some leaves you have already taken. Minus some leaves you have already. And you have saved 330. So how much leaves you have taken? Balancing figure 1,000 and? Yes or no? Now tell me, if as per IT rules, maximum days are 30. How many years? 30 into 30? 900. And how many leaves you have taken? 900 days leaves is allowed as per IT rules. And you have already taken how much? 1,020. As per IT rules, there is no leave credit. Nil. Nil or 11 months. Whichever is lower, nil. There will be no leave credit. Hence, there will be no exemption. Understanding what I am trying to tell you? What if this was only 40 days? What if this was only how many years? How many years? 30 years. Every year how many months? Sorry, how many days? 40. So total leaves allowed? 1,000 and 1,200. 1,000 and 200. Yes or no? Out of that, some leaves you have taken and 330 you are saving. So how many leaves you have already taken? 870 you have already taken? Yes or no? That is a balancing figure. Now see, as per employer's rules, it is 330. As per 40 days of employer, it is 330. As per IT rules, you will have to calculate. How much is IT rules? 30 days. 30 into 30, 900 minus 870. Now 330 will not be saved, only 30. Only 1 month. So as per employer's rules, 11 months. As per IT rules, 1 month. Whichever is. So for the purpose of exemption, you are not going to take 11. You are going to take only 1 month. Even though leave salary is given for 11 months, but the exemption will be taken on the basis of 1 month only. Understanding or not? But this time, everything was same. Why? Because employer is giving you how many days? IT rules is giving you how many maximum? 30. So as per employer's rules also it is 330. So as per IT rules also you will calculate, it will be 330 only. Understanding? So there will be no difference. 11 months leave credit you are going to get, and that 11 months will only be used for exemption also. Should I move ahead? Okay. Now apart from this entire thing is done, leave encashment is done. Now see what your employer is giving. He has given you gratuity. He has given you leave encashment. He has given you pension. But does your employer give you any perquisite also at the time of retirement? What perquisite is giving? So I will write down taxable value of what? Perquisite in respect of transfer of what? Motor car. Motor car at what? Concessional rate. Now this taxable value you have to calculate. Either you make a working note or you show the calculation here only. One and the same thing. How will you calculate? Come on, tell me. First of all, you will take the actual cost. Actual cost of motor car to employer. How much was the actual cost? 5 lakh. Inner column I will write. Now, this motor car was purchased by the employer. This motor car was purchased by the employer on 30th January 23 to 30th January 24. 1 full year of use. 30th January 25 and 30th January 26. 3 full year. And on 31st January 2026, when you are retiring, this car is given. Complete 3 years the employer has used, and the moment it was used for full 3 years, on the immediately next day you are retiring on 31st January 26, on that day the motor car is given. So how many completed year of use? 3 years. For 3 years the wear and tear will be reduced. At what rate? 20%. So what I will do? Less. 20% WDV, no? I will give you a tight slap. Underline that information in the question, deliberately given. The company depreciates the vehicle at what rate? None of my business. To value the perquisite, you will always reduce 20% on WDV. It is none of my business that at what rate the company is depreciating in the books. Am I going to go and check the books? For income tax purpose, I will have to follow income tax rules. And income tax rules tell me to reduce the depreciation for every completed year of use at what rate? 20%. On? Then why this information is given? To confuse you. That you take 15% on SLM base. I am screaming on top of my voice to tell you that take 20%, but still you are going to take this. Are you doing accounting? Then why are you going and checking the books? That in books, what was the rate of depreciation? What was the method? You are calculating salary head, and in the salary head, to determine the value of this perquisite, they have clearly told you that take the wear and tear at what rate? 20% on WDV. Then take the 20% on WDV only. Then they are trying to give you, no, company depreciates at 15% SLM basis. No, company depreciates at 15% SLM basis. None of my business. Let the company do whatever the company wants. But to value this perquisite, I will reduce on WDV basis and 20%. Yes or no? So for every completed year of use, how much? Understood, no? Take 15% minus wear and tear at 20% WDV basis. First year, 5 lakh into 20%. How much? 1 lakh. Wait, I will write it here. Second year wear and tear, 4 lakh into, how did you get 4 lakh? First of all, write down 5 lakh minus 1 lakh, 4 lakh into 20%, 80,000. Then third year also, 5 lakh minus 1 lakh minus 0.8 lakh will be 3,20,000. Yes or no? Into 20%. So reduce all of them. This is the depreciated value. Now, is this value higher than the selling price? Is this value higher than the selling price? No. No or yes? What was the selling price? So is this value higher than the selling price? Say no, na. If the value is more and the selling price is less, benefit is there. How much? If the value is more and the selling price is less, benefit is there. How much? That will be taxable. If the value is more, selling price is less, benefit is there. Same question bloody I am asking 10 times and your answer are changing 10 times. If the value is less and the selling price is more, benefit is there. Take one bottle water. Take some water and jump into this. This is sufficient for you. This is also too much. This much is also sufficient. Listen to me carefully. If the value is more, the selling price is less, benefit is there. Value is more, selling price is less. Benefit is there. Value is less, selling price is more, benefit is there. So what can you see? Selling price can you see? Tell me. Selling price can you see? In the question, at what price the car was sold to the employee? Amount recovered from the employee was 2 lakhs. For a car whose value was 2 lakh, 56,000. So the benefit is 56,000, taxable amount. Yes or no? See the solution, huh? Okay. Now what other thing he is getting from the employer? Tell me. Gift, huh? What type of gift? What type of gift? Gift voucher, no? Now gift voucher is gift in cash or gift in kind? Gift in cash or gift in kind? Voucher is given, money is not given, this is gift in kind. And any gift which is in kind up to 5,000, the value is not taxable. But the value here is, which is more than, so two things are possible. Either entire 6,000 you charge or you charge only 1,000. What we will do, we will charge full 6,000. Yes. And we will write down a note that alternatively, the excess amount over and above 5,000, that is 1,000, can also be taxed. Understanding? Hello? Apart from this, is your employer giving you anything else in the question? Please check. Check, no. This entire question I have written in front of you. Your employer is giving you basic, we have already taken. DA, we have already taken. Gratuity, after taking exemption, we have already taken. Then leave encashment, pension, we have already taken. Gift from employer, we have just now taken. Perquisite, when the motor car is transferred, that also we have taken. Uncomputed pension, also we have taken. So whatever amounts during the previous year you are getting from the employer given in the question, we have already taken all of them. And do we have the taxable amounts? In the first column, no? Or in the outer column? So don't do anything with the amounts in the first column, they are your workings. Taxable amount you have written in the second column. Yes or no? So how much is the basic? On your calculators, come on first. 2 lakh is your basic. Add 1 lakh DA. Then taxable amount of gratuity 80,769. Add 10,000 rupees pension. Add 1,50,000 commuted pension. Yes or no? Add 30,000 of your leave encashment. Then add 56,000 perquisite and add 6,000. Any one person will say 32. Wait, can I say that this is gross taxable salary? Hello? From this gross taxable salary, you get deductions. Under section 16, clause 1A. Clause 1A talks about at the rate of 30% of NAV, no? No? Please say no, 30% of NAV. How much standard deduction? Kamlesh, standard deduction how much? 50. Why? Clearly given in the question that he is shifting out. So if the assessee is shifting out, the standard deduction will be? Yes or no? Any other deduction? 16 clause 2 entertainment allowance, 16 clause 3 professional tax paid, not there. Only this deduction. Take this deduction. So it will be 5,82,769. This is your net taxable salary. Everyone getting this? Now, this net taxable salary, add income under other heads. Income under nil. No other heads income is given. Then gross total income will be 5,82,769. This was given, this was supposed to be calculated. But wait, one very important note we are going to write. We are going to write few notes over here. Have you made the solution like this with me? Everyone? Write down note number 1. Write down note number 1. Dearness allowance is considered as forming part of retirement benefits. Forming part of retirement benefits. That is in terms. Since it is taken as a part of salary to calculate the amount of leave encashment. In the bracket, write down retirement benefit. It is taken as a part of salary to calculate leave encashment, which is a retirement benefit. Yes or no? Hence, we have considered that it is a DA in terms. No need to assume. Don't write that it is assumed. No, it is not assumed. It is given. Yes or no? Next one. Note number 2. Note number 2 you are going to write for what? Yes, gift. Okay, no? So write down. Since the value of gift received during the previous year is more than 5,000, entire value is taxed in the above solution. Alternatively, the excess amount over and above rupees 5,000 that is 1,000 can also be taxed. And in such case, the net taxable salary, the gross taxable salary would be rupees how much? This will decrease by 5,000, that's it. Instead of showing 6,000, how much you will show? 1,000. So 5,000 less you are showing, so this will reduce by 5,000, 6,27,000. Yes or no? 6,27,769. And net taxable salary will be rupees 5,77,769. That's it. And GTI will also be 5,77,769. How did you get these amounts? Did you understand? Instead of showing 6,000 taxable over there, you would have shown only 1,000. Then every amount will be reduced by 5,000. That's it. Understood, no? Okay. One more note. Now tell me which note should come. Gift by colleagues. Gift of LCD TV from the colleagues. Gift of LCD TV from the colleagues on retirement. Shall not be taxable under the head salaries. Shall not be taxable under the head salaries. Why? Because not coming from employer, hence not taxable under the head salaries. Full stop, paragraph. Further, it will not be taxable under the head other sources also. Usually the gifts are covered under the head other sources. So if the gift is received from colleague, we would have considered this under the head other sources. But it will not be taxable under the head other sources also because LCD TV is not a specified movable asset, and also the value is not more than 50,000. So two things are required to charge any gift under the head IFRS. Number one, the gift should be specified movable asset. Now, which are the specified movable assets? You will come to know in the capital gains chapter. Okay, no, in the capital gains chapter, P.J. Das. P for paintings, J for jewelry, D for drawings, A for artwork, A for archaeological collections, S for sculptures, one more S, shares. P.J. Das. These are specified movable assets. These are specified movable assets. If you get any of these assets as a gift, only then it will be taxable under the head IFRS. And one more condition, the gift should be for a specified movable asset and the value of that gift should be more than 50,000. First of all, the LCD TV is costing only 50,000. Value is not more than 50. And the second reason, LCD TV is not PJ Das, is not a specified movable asset. Hence the gift is not taxable. Understanding or not? Everyone? Sure, everyone? So what we are going to do now, this note, you have written no, it will not be taxable because of these reasons, these three notes. Now if at all this type of question will come in the exam, trust me on this guys, this type of question might come for minimum 8 to 10 marks. 8 to 10 marks. And write down besides this, comprehensive question, write down, comprehensive question covering retirement benefits, and perquisites. So few perquisites are also there, retirement benefits are there, comprehensive question is there. So at the time of revisions, you have to solve this question, okay? And you will solve the question in this manner, then also it is okay. If you don't want to show the calculations in your format, show the calculations separately in a working note. Calculate the amounts in the working note and you can write down the amounts like this. Getting my point? Now, you will get the same amount. See, 6,82,769. We also got the same amount, no? Oh, 5,82,000. So, 2,00,000, 1,00,000, 6,000, 56, 80,000. Can you see this 1,30,000 over here? What is this? And our taxable amount was only 30,000. Because of that, 1,00,000 is less. So, sir, our leave encashment is correct or their leave encashment is correct? Our is correct. 100% our is correct. Why? Confidently I am telling you that if 11 months, for this 11 months, if you are going to get 30,000 amounting to 3,30,000. Understanding? In this 30, 20,000 basic is also taken, 10,000 DA is also taken. Meaning, to calculate your retirement benefit, what did I say? To calculate your retirement benefit, leave salary is taken as 30. And in this, if 10,000 is taken, meaning to calculate your retirement benefit, the DA is counted. The employer will count this DA only if the DA is given in contract. Otherwise, he will not count that DA only. He would have taken only 20,000 salary. Then definitely the leave encashment which he would have given would not have been 3,30,000, it would have been 2,20,000 only. If the DA was not part of employment contract. The DA was part of employment contract, it was given in terms of employment contract. That is the reason why that DA as well as basic both are taken to give you leave salary. And these poor people have assumed, they have given an assumption that DA is, if nothing is mentioned in the question, DA is assumed not in terms. Why the bloody hell you are assuming that it is not in terms? Clearly it is visible that it is in terms, and still you are making such bullshit assumptions. 100% this answer is wrong. The taxable amount should be 30. And see what they have done. What they have done, I will tell you. See, taxable leave encashment, read the note. Then they have covered their mistake also by giving this note. It has been assumed that DA does not form part of, they are assuming that DA is not in terms. Wow. In case it is assumed that DA is forming part of, in case it is assumed that DA is in terms, in that case, third limit would be 3 lakh and the fourth limit will be 3,30,000. In that case, taxable encashment will be, which we have already got. And even this answer is correct according to them. So why to give these two different answers? If it is apparent and clear that DA is given in terms, take in terms and show the taxable amount as 30,000 instead of showing 1,30,000. Understanding? So our calculation is correct. Okay, don't follow all these things. Understood, sir? So this is ICA study mat. Even ICA study mat is made by some human. Okay, and they are supposed to commit mistakes. So, okay. Now everything else is same, no? Everything else is same. Done? So we'll take a small break. After a break, we are going to meet and we'll try to finish this chapter after the break. Okay, no? Take a break, 45 minutes. 45 minutes is enough here. 1 hour you want? You are going to feed entire Bangalore. You are supposed to eat on your own, no? 45 minutes is enough, After 45 minutes we are meeting. 1 hour you want. What will you do in 1 hour? Oh, rest also. So take 1 hour break. Okay? Yes.